LTC stock, ticker symbol LTC. Is this the best dividend REIT to buy right now? LTC stock is up 17.5%, which is kinda odd during these market conditions, especially since the S&P 500 is down almost 20%. The reason why people love LTC stock is because of the monthly dividends. Dividend yield is at 5.5%, which is really high. On top of that, they pay you a monthly dividend instead of a quarterly dividend. But does this mean that LTC stock is a buy? In this video I'm going to show you real quickly what LTC does, the historical returns, the fundamental analysis, dividends, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does LTC do? LTC Properties Incorporated is a self-administrated real estate investment trust that invests primarily in senior housing and healthcare properties in true triple net lease transactions, mortgage loans and other investments. If we dive in the latest report and check the revenue breakdown, we see that own portfolio represents around 71% of the total revenue. Mortgage loans represent 25.9% of the revenue. Notes receivable 1.8% and unconsolidated joint ventures 1.1%. If we break down by property type, we see that assisted living represents 50%, skilled nursing 48% and the last two around 1%. In this graph we see the share of old age population in the US from the 1950s to 2050. And of course this is a forecast and it's not written in stone or anything. These are rough assumptions. But what's interesting to see is that the older people are growing in share, meaning increase in size. So this could be a thing for LTC. And this graph is provided by Statista and not by LTC. If we dive in the LTC presentation again, we see that occupancy rate is at 94%. And to be honest, I prefer REITs that have at least 96%, so they are almost there, but keep an eye on this number. The last thing that I find very interesting is the FFO. We see that year over year it went up from $0.57 to $0.64. Dividends are at 90 cents per month, or $0.57 per quarter, meaning with an FFO of 0.64 dividends are covered, but only with a small margin. Payout ratio for the dividends based on the FFO is 89%, so definitely keep an eye on this number. And now that we know more about LTC and the latest quarterly results, it's time to check the historical stock price to see what happened there. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. I also included CTRE, CHCT and GMRE as their main competitors. On the 5-year chart we see that LTC only had a 13.8% return including dividends. So to be honest, that's not a lot. The S&P 500 is at 68% return, meaning LTC underperformed the S&P 500 big time. CTRE and CHCT also underperformed the S&P 500 but by a smaller margin. GMRE did outperform the S&P 500 big time with a 111% return. On the 1-year chart it gets quite interesting. LTC had a total return of 31%, while the S&P 500 had a minus 10% return. CTRE is nearly flat, and both CHCT and GMRE had a minus 25 to minus 28% return. So LTC did outperform all the stocks on the 1-year chart. On the 6-month chart is pretty much the same story. LTC had a 50% return while the S&P 500 is at minus 12%. CTRE had a 30% return, and again CHCT and GMRE had a negative return, minus 50% for CHCT and a minus 35% for GMRE. On the 1-month chart we see a minus 8% for LTC, the S&P 500 and CTRE. CHCT and GMRE are both at minus 14%. So on the 5-year chart LTC didn't do a great job, but since the 1-year chart they did pretty well and beaten the S&P 500. But does this mean that LTC stock is a buy? Let's check the fundamentals of this company to see if they are a buy. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. LTC is a 1.6 billion market cap company with a PE ratio of 17. But be aware that LTC is a REIT and the PE ratio isn't the best way to value a REIT, so we are going to use the price to FFO to value LTC. LTC is at $41 and has an FFO of 2.26. This leads to a price to FFO of 18, which is a bit on the high side for a REIT. I prefer the price to FFO below 16. Later in the video we will create 3 price targets based on a low, mid and high growth number, so make sure to watch until the end. Next up is revenue. LTC has a 160 million trailing 12-month revenue, and in this graph we see that the revenue went up quite nice and steady, until the big drop in March 2020, which is related to the lockdown periods. After March 2020, revenue wasn't as steady and consistent as before, so definitely keep an eye on this number. Net income is at 92 million, which gives us a profit margin of 57%, which is pretty high, but also very common for a REIT. The thing that I don't like here is the fact that the 5-year average profit margin is higher. This means margins are decreasing a bit. Definitely keep an eye on this number as well. Return on assets is at 7.3%, which is pretty good for a REIT. And it's the same story with the return on equity. The most important number here, return on invested capital, or ROIC, is at 6.4%. And although this is still pretty good for a REIT, I don't like it when it's lower than the 5-year average. So again, keep an eye on this number. Another thing that's very typical for REITs are the higher debts versus cash available. So right now debt is at 734 million, while operating cash flow is at 90 million, and leverage free cash flow is at 29 million. So this means they aren't capable of paying down a big chunk of the total debt. But for a REIT, I think it's pretty okay at this level. But still, keep an eye on this number. And it's very important that free cash flow is growing over a longer period of time, since this is used to pay down debt, buy back shares, do acquisitions and all other things. In this graph we see an interesting pattern. It's going up and down quite a lot. But ever since 2016 it's going up kind of consistent pattern. So I do like the past couple of years in terms of free cash flow growth. Next up are the dividends. Right now dividend yield is at 5.5% and they pay you a monthly dividend of 90 cents per share or $2.28 annually. Payout ratio is displayed at 98%, which isn't the correct payout ratio since REITs use the FFO to calculate the payout ratio. Earlier we saw that the actual payout ratio based on FFO is at 89%, which is still pretty high. I prefer REITs with a payout ratio of 80% or lower. The 5-year growth rate is at 0% and so are the years of dividend increases. And the 90 cents monthly dividend isn't being increased since 2016, which is kinda disappointing. But on the other hand, dividend yield is also very high at 5.5%. Overall, I think it's very nice to have a monthly dividend paying stock, but this shouldn't be the main reason. No dividend increase since 2016 is something that I don't like that much. Luckily, the dividend yield is very high at 5.5%. Next up are the fundamentals of LTC versus some major competitors. I decided to include CTRE, CHCT and GMRE. LTC has the lowest revenue growth year over year and also one of the lowest net income growth year over year. The 5-year revenue compound annual growth rate is also the lowest at LTC, so this is something that worries me a bit. CTRE and GMRE have the highest gross profit margin, while LTC has the highest net income margin, so they are the winner here. Return on equity and return on total capital is also the highest at LTC, so they are the winner again. All companies seem to have a lot of debt compared to the cash position, which is also very common for a REIT. Next up are the dividends. The thing that people love the most about these REITs. GMRE has the highest dividend yield and all other companies have a dividend yield around 5 to 5.5%. Dividend growth is the highest at CTRE and CTRE also has the most consecutive years of dividend increases. LTC has the lowest. Overall, I think dividends are pretty similar. There's no big winner here. And about the other fundamentals, LTC didn't do a good job there. It seems that in most cases other companies were having better fundamentals. But does this mean that LTC stock is overvalued? Let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. As we saw earlier in this video, since March 2020 revenue is struggling, and that's also reflected in the 1-year average and the 5-year average. So I'm filling in -2% for the low side, 0% for the mid side and 2% for the high side. Profit margin is decreasing just a tiny bit, so I'm filling in 56, 58 and 60%. And it's the same story with the free cash flow margin. PE ratio I'm filling in 15 and it's the same story for the price to free cash flow. My desired annual return is also 15% since I want a higher margin of safety with this company. Usually I'm filling in 12.5% since I can get an easy 10% average annual return with owning an ETF. But with this company I want a higher margin of safety. Right now LTC is around $41. I hit analyze and it doesn't look that good for LTC stock. Only red numbers. We have a low price target of 17, a mid price target of 20 and a high price target of $24. So based on these numbers, LTC stock is overvalued. And that's also my final conclusion on this company. Fundamentals aren't that great and they are struggling with the revenue growth. Dividends are pretty okay, but payout ratio is very high and the dividend yield is the only thing that I really like about this company. And to me, that's not enough. So for now, I'm skipping LTC stock, since I think there are better deals in the market. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.